What's going on with everyone? What I'm about to say about XRP has been kept secret in boardrooms and whispered between central banks for years. You haven't heard it until now. Because after what we talk about today and after you know what's going on with XRP and on Wall Street, one thing becomes very clear. The institutional age of XRP is not coming. It has already started. And you'll never fully understand how deep this goes if you miss the next 10 to 15 minutes. There's an account called Lord Belgrave that just posted a very long topic. We're going to do it together. As we talk, I want you to keep each name in mind and think about whether or not that person has worked with Ripple, because you'll see how everything fits together in the end. His story goes that in 2019, he was sitting in a consultant room at the Bank of England's Threadneedle Street building. There is a loud clock in this room, and each chair looks like it was put there on purpose. Representatives from some of the world's largest banks were sitting across from him. There was a policy expert from the ECB, Barclays, Santander, Deutsche Bank, BNP Paribas, and yes, Ripple's institutional strategy team. There is no store noise or hype. We had a real talk, the talk that goes on behind the talks. Someone slid a secret information pack across the table. It felt like reading the future because the idea inside was so bold and ahead of its time. Ripple planned to release a stablecoin backed by the euro that was made for business settlement, built to connect straight to the European financial system, not a store ticket. Not a stablecoin from the dollar store, a fully collateralized programmable payment instrument that the central bank must be able to see. Built to work with the XRP system directly. The room changed as soon as those words were said. The finance team at Deutsche Bank started running liquidity compression models right away. Barclays began to separate funding rounds during the day. It became clear to BNP Paribas that they could stop relying on expensive Nostro funds. And the person from the ECB? He was already making plans for how to make Target 2 and the future structure of digital currencies issued by central banks work together. The numbers on the economy were crazy. Less exposure to counterparties, less capital loss, almost no costs to run. Reconciliation between partner banks in real time. A single layer for settlements all over Europe. The ECB expert then said something that will stay with you forever. If a digital instrument backed by euros fits with the way supervision works, it becomes Europe's primary settlement rail, not by law, but because it works better. That's when it all made sense. Europe knew where the world was going before it happened. It was clear to Ripple too. And today, Wall Street is finally waking up to the same truth for the first time. Before we go any further, this is why placement is so important. Not when NPR tells you to. Not when everyone is on the same page. Keep going. Because this is where things really start to get tough. And fund manager worth $1.5 trillion named Franklin Templeton dropped a bombshell. They said that as institutional lines get stronger, up to $2.3 trillion in global liquidity is getting ready to move into digital assets. And it was the first time ever that they put XRP in the same group as Bitcoin and Ethereum as a major winner. In history, that is. Why? This is because XRP has not been a standard investment until now. It wasn't in ETFs. It wasn't saved in a retirement account. It couldn't be reached through goods made for institutions. XRP was not widely used, even though it was designed from the start to work with banks. Now, though, everything is different. XRP ETFs are now available. There are institutional tracks. Following the rules has been locked down after 2023. Settlement has been shown to be useful. We're about to hear from Franklin Templeton, who will say in no uncertain terms that they have been working with Ripple for years, beginning in Asia. As this story goes on, Wall Street allocators, the people who can move billions of dollars with a speech, start to see XRP as a real settlement asset. Franklin Templeton's main point is quick and strong. Conditions for money are going to get easier. The money will move out of bonds and other debt-based assets. That $2.35 trillion is now ready. That's where ETFs come in. For now, XRP is inside those gates. ETF issuers have taken in hundreds of millions of dollars in assets under control in just the first few weeks, less than 2 weeks to be exact. For the first time ever, demand from the public and demand from institutions are in sync, and millions and soon billions of XRP have been taken out of circulation. This is the part that almost no one talks about. The rise of Bitcoin ETFs was caused by dominant stories. First to move. Online gold, a place to store value. But XRP is preferred for its usefulness. Bitcoin doesn't. The amount of XRP in circulation is smaller. Throughput in the real world. Clarity in regulations, alignment to ISO 2022, and the speed of closure that Wall Street really needs. Wall Street doesn't need a way to keep money safe. They need a way to settle down. Right now, XRP is right where it was. If ETF moves get as big as they did for Bitcoin, they will have a much bigger effect on XRP. I mean it when I say that. Due to the fact that XRP has a totally different market structure, circulating supply, and utility profile. But keep this in mind, what we just talked about was just the beginning. Because what comes next is an interview with Franklin Templeton, which turns this from a guess to a proven fact. They are honest about having worked with Ripple for a long time. They talk about how Asia was the start. People talk about how well they understand what's going on and where this place is going. And most importantly, they talk about the $2.3 trillion that could come in. Now, I want everyone to remember something. Bitcoin was seen as digital gold before ETFs. Ethereum was the building blocks of digital technology. What about XRP? It was seen as an outsider project, the one the news didn't cover, the one officials went after, the one that organizations said they didn't want. That story is now formally over. XRP is now getting more attention. Also, please pay close attention to what Franklin Templeton said, because this isn't just store talk. This is the language of institutions. They were asked if the rising demand from both businesses and regular people is starting to push XRP to the same level as Bitcoin and Ethereum ETFs. And what they said told us a lot. They said, I feel like we're going that way. They then went further. They talked about how stablecoins are one of the most interesting things going on right now. Additionally, they made it clear that XRP is one of only a few chains that has its own stablecoin, RLUSD. That's important because that makes what can be made on top of the chain even better. They talked about how these new rails will make a huge jump in deals between computers as Web3 models get better, not guesswork from people, transfer of value by machine. Yes, that's the future. After that, they said something very important. They said it makes a lot of sense to do business when you have your own stablecoin and a public chain with an independent proof network that is already running at scale. Their goal over the last few years has been to work together with Ripple and do more together because of this. Even the SEC case was mentioned, and it was said that even though Ripple had problems in the US, they never stopped building outside of the US. Franklin Templeton does business all over the world, and they stated that they have been working with Ripple in Asia for a while now. This kind of involvement is now spreading to more parts of the world. Take that in. What did you know? Nobody. This was never made public. A big asset manager and Ripple have been working together for years, but they haven't told anyone about it. Don't forget that during the case between Ripple and the SEC, it came out that Ripple was linked to over 1,700 NDAs. We didn't know their names. Franklin Templeton is the one we know for sure now. They're not the only ones, I promise. But after the next report, this will no longer be interesting at all, for the reason that this comes from Wisdom Tree. Know this about Wisdom Tree if you don't already. They offer a lot of ETFs and are one of the biggest in the world, and their most recent shocking study confirmed what people inside the company have known for years. XRP is the only digital asset that has steady demand from institutions in all of the world's big regions. Let's see how many there are. Put Europe first. Europe has the safest trading market in the world. They move slowly. They don't go after hype. And just this year, $549 million have been put into XRP goods in Europe. That number has made Ethereum 3 times bigger. And XRP has brought in more money than all the other cryptocurrencies put together, except for Bitcoin. That's not just a guess. That's what institutional choice means. Now let's look at markets around the world that aren't in the US. More than $252 million was made with XRP. $268 million were brought in by Bitcoin. But here's the important part that everyone misses. The investment items for Bitcoin are about 25 times bigger than those for XRP. In terms of comparison, this means that institutions put 25 times more money into XRP than they did Bitcoin. It's not a coincidence. That's being sure. Let's talk about the US now. Since the US is late a lot, almost 10 years late, but now even the US is becoming aware. Over $241 million worth of XRP came into US markets. A lot more than Solana, more than any other currency in the same group. The best part is now here. Over the course of 1 month, Bitcoin and Ethereum lost a total of $6.4 billion. Everything but XRP was being sold by institutions. That's important. There is no denying the trend here. The EU is buying XRP. Buyers outside of the US are buying XRP. In the end, the US joined too, and they're not buying when the bull market is going crazy. They buy when they are under a lot of stress. Yes, that's exactly how smart money acts. When people in every major area of the world buy the same asset during times of fear, it's clear that something is up. XRP is being positioned as the platform for settlement in the next generation of finance. It's not a joke, not a trade in stories. The infrastructure. Now here's the part that should really interest you. The gates to the flood haven't even been fully opened yet. In just 7 days, several banking giants worth $3 trillion or more have completely changed the story. Their 50 million clients can now buy crypto ETFs. Vanguard is an $11 trillion asset manager. Bank of America, which is in charge of $1.8 trillion, now publicly tells their clients to put 4% of their money into crypto. With more than $12 trillion in assets, Charles Schwab is constantly growing its crypto exposure and infrastructure. They are going to let people buy crypto directly in January of next year. Take that in. This isn't just marketing guesswork. This isn't just talk on Twitter. This is real-time legacy banking giving up. Big banks are finally getting on board with the crypto rails we've been talking about for years. This is the first time this has ever happened. And the trillions of dollars in passive capital don't just start pouring in when they find digital assets that are legal. It floods. Add that to what's going on in the economy as a whole, because this is where more fuel is added to the fire. You already knew what was going to happen because Jerome Powell told you. He said in a very slow and calm voice that the Fed will start adding funds again at some point. He told you straight out. As of now, the balance sheet is frozen. Mortgage-backed securities are rolled off and put back into bonds. Reserves get smaller for a while. To keep up with the economy and banking system, reserves will need to start rising again at some point. This is the important part. That's right, easing up gradually, more fresh drink, more money coming into the system. And every time this has happened in the past, risk investments have gone down. Bitcoin works faster. And useful things that people really want, like XRP, don't just move, they go off. Now put the pieces together. It's a perfect storm when QE cash, access to ETFs, and global institutional accumulation all come together. We're not sure of the exact time. It's never done. We know it's coming, though. They say it's going to happen. All of this doesn't make sense unless you know Ripple's last part, the part that stores almost never pay attention to. Just think about the companies they've bought and the structures they've built. G Treasury, Rail, Metaco, and Ripple Prime. Balustrade, each one fits into the puzzle. Solutions for custody, managing the treasury, brokerage for institutions, building blocks for payments, settlement trains, building ready for ETF. This is not advice about money. This is exactly what institutions need before they can use a lot of cash. Also, you need to know this about organizations. There is no need for 10 different systems. They don't want answers that are broken up. They want a single system. The thing that Ripple is making is that corporate treasury networks can join the XRP community through G Treasury alone. They are the same kind of clients who move billions of dollars in cash across countries every day. This trend has been seen in the past during different economic times, bringing together one set of steps: adoption by institutions. The only thing that's different this time: to pay, the XRP ledger is used. XRP is becoming the thread that holds the modern banking system together. The thing that settles payments, lowers barriers, grows liquidity, and moves value instantly across countries and balance sheets. People who look at the chart all day, all night, all minute and say nothing is happening are missing the whole structure that is being built below. Institutions know about it. I've lived here for 8 years. 8 years. I've never been more optimistic about XRP than I am now. This isn't just theory.